What's good? What's good? What's good? So one of my clients have this question right here. Instead of just answering her, I want to answer everybody because I know everybody might have this type of question. So instead of trying to figure it out, I'm going to give you the information so we'll be able to change your situation. So you already know what time it is. Let's get right into it. Welcome back to the #1 credit educational channel. Hey, my name is Dave, where I show you how to remove negative items off your credit report, how to build a relationship with those banks, and how to get to that money. So in today's video, I'm gonna break down one of the factors of your credit score, which is credit mix. I'm gonna give you an understanding because a lot of people have questions about what type of accounts do they need, what accounts should they start adding, how do I get approved? So I'm gonna give you the information so you can run the play, so you'll be able to change your situation. So let's get it. So you know how to jump on the whiteboard so you can have a clear picture to understand one of the factors of your credit score, which is credit mix. Credit mix makes up 10% of your score. And once you understand that credit mix makes up 10% of your score, now you'll be able to understand what type of accounts do you need to start increasing that credit mix of your credit score, right? So you need to have different type of accounts. You need to have installment accounts, you need to have revolving accounts. A lot of people don't understand what type of installment accounts do I need to add on my credit report. What type of revolving accounts do I need to add on my credit report? Because the underwriters are looking and they want to see that you can be able to manage that. They want to see that you can manage installment accounts. They want to be able to see you can manage revolving accounts. And once you understand that, now you can start adding different type of accounts and start increasing your credit score every single month, because the more accounts you have and the more accounts that you're paying back every single month, the more your credit score will go up. And as long as things are not negative on your credit report, you'll start to see your credit score up. And if you do have negative accounts, as you're removing these negative accounts, you can start adding good positive history, which is installment accounts, and you want to start adding revolving accounts, right? So on installment accounts, you want to start adding, I can talk about different ones. Self. This is really easy. You pay this every single month. You come up with a contract with Self. It's a 24-month or a 12-month contract, right? And what you're going to do is pay anywhere between $25 to $30 a month, right? When it comes to Self, this is a type of installment account on your credit report that you can add. Another one is a personal loan. And you'll come up with a contract with the bank, and it could be anywhere from 12 months, 6 months, 3 months, or whatever type of personal loan that you need. You can basically take out a personal loan from a bank, and you have to pay the same payment every single month, right? It could be anywhere from $30 to $100, depending on what type of loan that you actually get. So this is another installment account you can add on your credit report. Another one you can add is a car loan, or most people have, right? This is another installment account that will help increase your credit score, because they want to see that you can handle different type of accounts, right? So a car loan is another one. Mortgage. This is another type. I'm sorry if my handwriting is sloppy. I'm just trying to write fast. But this is another type of account you can add on your credit report to start seeing improvements when it comes to your credit score. The more better accounts you have, the more type of accounts you have, the better. So and also a student loan is another one. This is kind of the first type of account that we get when we first get out of college. when we first get out of high school. So if you have a student loan and you pay it back, it looks good because you managed that debt for the last 5 to 10 years or 20 years or whatever, how long you had the student loans. But you want to have different type of accounts, and these are the different type of installment accounts you can add. There are plenty more installment accounts, but I just broke down the top 5 installment accounts you can add on your credit report, so to see your credit score improve, right? Different type of revolving accounts you want to have, right? So you want to have a regular credit card, which is issued from the bank. Another one you can add is a store credit card. Another revolving account, you can have a line of credit from the bank. Another revolving account you can add is a charge card, which is usually from Amex. And And these are the different type of revolving accounts you can start adding on your credit report, right? So once you add these different type of credit accounts, these different type of revolving accounts, you'll start to see your credit score increase because the bank will now see that you can manage credit. So if you have starter cards, you have store cards, you have line of credit, you have charge cards, you'll see that your credit score start increasing over time because you have these different type of accounts. You're paying them back. You're paying them on time. They're seeing that you can be able to manage your debt. So take care. Apply for these different type of accounts. Make sure you're managing these different type of accounts. Pay everything back. Make sure everything's set up to come out automatically, and you'll see the improvement when it comes to your credit score. If you don't have no type of accounts, no installment accounts, you want to make sure you add these different type of installment accounts. A regular personal loan, a regular car loan, a mortgage loan, student loan, credit card, store card, line of credit, charge card. You will see if you don't have credit card, you will see that your credit score is really low because we've been told that credit cards are the devil and we don't have credit cards. We lack in that area. And one of the biggest things when it comes to your credit score is having having a revolving account. And if you don't have a revolving account, you're missing out over 165 points. So make sure you add a revolving account on your credit report and you'll see your credit score increase. So if you have any questions or if you need any help to improve your credit score, watch this video right here. I break down step by step on how you can improve your credit score, on how you can remove things off your credit report. I give you the game, no fluff, no none of that, right? I'm showing you how you can actually improve your credit score, how you can remove negative items, and you can watch. I also have a free credit playbook. Link is in the description. I'll show you how to remove your things off your credit report as well.